Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. However, we are filming this one on a Saturday, guys. I do apologize for yesterday. I had some personal things to take care of after the market closed, so we'll just have to spend Saturday evening together instead of Friday evening. Hope all of you have been very well. Now, in terms of what happened on Friday's markets, guys, well, it was a very nice day for a little bit of a bounce. The bounce came for two reasons. Number one, we had a PCE inflation report come in a lot better than expected. And thereafter, guys, we're also on a technical standpoint looking for some oversold bounces on the SPY and on the QQQ. So nice to see that those bounces finally came to fruition. Now, in today's video, what we're going to cover, guys, number one, we're going to go through that PCE inflation report and see exactly how inflation stands. Number two, we're going to be taking a look at our major technical analysis rundown in terms of our major stock market indexes. And then we're going to take a look at big tech names to see whether or not there's some nice dip buying opportunities to be had across most of your Magnificent Seven names. Lastly, guys, in the last portion of the video, we're going to be going through a full rundown of all the possible companies and ETF setups that I do see as nice opportunities for buying right now as we continue to see the rotation out of big tech and semiconductors and into more value-oriented names and even into a little bit more risky names such as small caps manifested through the gains in the IWM Russell. So a lot to cover in today's video, guys. If you want to skip forward to the portion of the video where I go over the possible trades, just look down in the video description, guys, and you'll see it's more towards the end. So let's get right into it. SPY on the Friday session up 1.12%, QQQ up a very healthy 1.03%, and really the entire market was benefiting from a bounce, whether it was technology or pretty much your value-oriented names, the entire market rebounding very, very nicely after a brutal start to the week. So a lot of your big tech names were back in the green, everything except for Google pretty much. Apple struggling a little bit, but maintaining flat. The rest of the market, though, very, very healthy. Now, financials coming roaring back as well. Healthcare putting in a very decent session. And the bottom half of the market, guys, value anywhere from industrials all the way to consumer defensives, having a very good day overall. Take a look at the one-day performance, guys. You can see that every single major sector finally in the green after a very nice bounce, which leaves us at a one-week performance status where most of everything, guys, is in the green, especially your more value-oriented names. The only things that remain in the red, guys, were once again big tech related and semiconductor related. Take a look at your 1 week relative and you can see that even better. The bottom half of the market having a relatively good time, but big tech has been the large loss leaders for the entire week. And a lot of people do think that will continue. Now, in terms of exactly what we're expecting for the week, guys, it's going to be an extremely, extremely volatile and action-packed week. In terms of the macro, guys, well, we have a couple jobs reports starting off on the Wednesday with ADP and on the Friday, non-farm payrolls, which is pretty much your biggest one on any given month. And then we have Jerome Powell, of course, coming in with an interest rate decision for the month of July. Now, the expectation is for no change in the interest rates, but we will get to see his continued commentary on the direction of the economy, the jobs market, and inflation, which has been steadily coming down since our last meeting that we had with Jerome Powell at the end of the month of May. So curious to see his stance on whether or not they are potentially ready for those rate cuts in September. So without further ado, guys, in terms of our earnings as well, we have an extremely charged week. Take a look at all these names across multiple sectors, right? McDonald's starting off early on Monday morning, followed by ON Semiconductors, one of your other semiconductor names in the market right now. Tuesday is going to be a very big day as well. SoFi, AMD, PayPal, Microsoft, Starbucks, so many names. Procter & Gamble as well. First Solar for some of your solar companies too. Wednesday, Boeing, Meta, ARM, another semiconductor name, Qualcomm, more semiconductors, Lam Research, more semiconductors, again, MasterCard before the open as well. Going to be such a huge day, Tuesday, Wednesday, and Thursday as well. Thursday, you got Amazon, Apple, of course, right? Intel, Coinbase, so many big names to cap up the week, guys. And we end it all with a few of your energy stocks, which should be a very nice rotation trade as well, as they do tend to outperform any declining interest rate environment, especially being more towards the value side of things. So extremely charged week, guys. Let's get right into the PCE data before we go over more technical analysis, shall we? So in terms of what happened on Friday's inflation report, well, it came in very, very, very nice, guys. Look at this. Fed's key inflation gauge rose 2.5%. The expectation was for 2.6, so it actually came in lighter than expected. Very good in June from a year ago, easing path to the rate cuts. Now, couple little drawbacks here. Personal income rose just 2.2%, below the 0.4% estimate. So personal income starting a tiny little decline here, not really declining, but it's had such a nice little increase that we're kind of just peaking out in terms of personal income gains. That's okay. Spending increased 0.3%, beating the forecast. Consumer spending supposedly still relatively healthy, and the personal savings rate decreased to 3.4%. So what people can't do in terms of their personal income rises, right? They're now dipping into savings to really support their spending. So let's move on a bit further here, guys. Let's take a look at the graph. You can see 2.5% on PCE, guys. It's pretty much tie for a low of January and low of February, going back all the way to 2021 to find those similar levels. But you can see, guys, inflation is on a very nice downtrend, to say the least. Here's what some of our analysts had to say in terms of a summary, and I do agree with this. A two-word summary of the report is good enough. Spending is good enough to maintain the expansion. Income is good enough to maintain spending. And the level of PCE inflation is good enough to make the decision to cut rates easy for the Fed. Goods prices fell 0.2% on the month, while services increased 0.2%. Still very sticky services numbers, guys. And most of that was housing. Once again, housing-related prices in June rose 0.3%, a slight deceleration from the 0.4% increase in each of the last 3 months, and the smallest monthly gain going back to at least January 2023. So housing remains your most sticky component, guys. I understand that housing for a large majority of Americans and Canadians, like myself for that matter, is representing about 35 to 50% of your income. So having sticky housing costs, guys, is really what's hurting everybody's wallets. It is not the goods prices anymore. That is for sure. Now, let's continue. Overall, it's been a good week for the Fed. The economy appears to be on solid ground as measured by GDP that we got on Thursday, which was very good at 2.8%. And PCE inflation essentially remained steady. But a rate cut next week remains a long shot, talking about this upcoming week in July. And while there's plenty of time for the economic picture to change before the September FOMC meeting, the numbers have been trending in the Fed's direction. They are talking about the probabilities of a Fed rate cut in the month of September. Take a look here, guys. It is now at 88.2%. So traders and investors are largely pretty much pricing in a September rate cut. How does it fare for the rest of the year, guys? We'll take a look at your cumulative probabilities for the remainder of the year. The markets are now pricing in 3 total rate cuts, one in September right here with a likelihood of 88%, one in the month of November with a 76% likelihood, and again, another one in the month of December. This one a little bit more unsure though, at only 69%, but traders largely speculating here for about 3 rate cuts. I would not be surprised if we at least get 2, but if we get 3, that would be a very decent surprise to the upside, of course, and should be fairly good for the markets. Now, moving in here, guys, let's get into some technical analysis after we just recapped our inflation, and we're going to be going through these a little bit quickly because we already know what to expect, right? We are in the context of daily downtrends on the SPY. So daily downtrend underway, the bounce is now officially underway too. Why? Because we finally started recapturing our hourly uptrend on the SPY. Double bottom right here, barely putting in a higher low and now higher high. So we do have an hourly uptrend. If this does maintain into the Monday session, we are looking at a daily bounce. I'll remind you guys, to reverse this daily downtrend, we need a very healthy bounce size to give the bulls enough space to create that daily higher low and maybe just reset into a daily uptrend and start erasing the pain. Anything under a decent sized bounce, guys, will pretty much tend to be a rollover scenario for the bears into more consolidation. So let's take a look at the bounce size right now, guys, and you will see that it's not all that bad, right? So in terms of the size of the bounce after the last 2 days of trading, we are now up to about a 50% bounce. Let me just zoom this in so you guys can see it. 50% retracement on the fib, which is a decent sized bounce, guys. Usually we want to see this get at least as high as 618. If we can get all the way up to 618 on the Monday session, it does set up the bulls quite nicely to have enough space to set up for the daily higher lows and go for the daily trend change. However, guys, because it is this week, because we have Jerome Powell coming to speak on the Wednesday, that's going to be very volatile. And because we have so many big tech earnings, if I can find them, we have so many big tech earnings, right? Microsoft, Meta, Amazon, and Apple. If those are not well received by the market, guys, do not expect the bulls to be able to recapture this daily uptrend. If anything, it'll put a lot more sell pressure on the SPY and the QQQs, and we may just revisit the lows if ever those big tech earnings are not well received. So price action is all good and fine when we don't have extremely volatile weeks like this, right? It is very difficult to even say that if we get a 70% bounce on the SPY, it's very difficult to say that the bulls can do this, guys, if ever these earnings are not well received from big tech, you can almost guarantee that we will be revisiting these lows. So in the worst case scenario, guys, we may just be looking for lower lows on the SPY. And in terms of that context, we will take a look at the weekly higher lows down here at 520 on the SPY. So if ever we continue pushing lower because of big tech earnings are bad, just rely on the fact that we have very big, decent support down here, 530 to about 515 on the SPY, looking to eventually set that weekly higher low and maybe get a little bit of a bounce going later on in the month of August. As a whole, guys, we are just maybe looking on the monthly for a little bit of a monthly higher low, reaction zone down here, which we just saw on the weekly, and looking for that continuation later on in the year. Keep in mind, not only do we have earnings, seasonality in August and September are not known to be the best at all. So that's why I do say that maybe the month of August is going to be reserved to be a little bit more red than expected, especially in terms of big tech and semiconductors. If this rotation does continue, their sheer weight in the index, guys, if these guys are red and the entire rest of the market is green, unfortunately, we will just continue our slow decline throughout the levels lower. Moving on to QQQ right now. So QQQ also in a very stable daily downtrend for the bears right now. The size of the bounce is less impactful than is on SPY, right? Take a look at the size of this bounce on SPY, decent 50% bounce. But in terms of the QQQ, guys, the bounce remains fairly weak to say the least. Take a look at the size of the bounce right here. You will see it is only a not even 30% bounce. So if ever we lose this hourly trend coming into the Monday session, cracking below Friday's lows, unfortunately, that is the extent of your daily bounce, and we may just be due for lower lows. Now, keep in mind, guys, big tech earnings are going to be the deciding factor in these price action levels for the week, right? If we get very good earnings, could create enough space and try and recapture the daily uptrend. But if we get bad earnings, guys, expect us to be revisiting even more lows on the QQQs and a big support level on the weekly coming up, 450 down to about 435. This, in my opinion, is short-term max pain for the bulls. So if ever we do clip into this area over the course of the week, guys, that is when I do believe that the weekly bounce and maybe a daily uptrend can form a base from here, start recovering a little bit and get us a little bit of a weekly bounce going, right? But we got to be careful because we remember what happened last fall. A weekly bounce is all good and everything, right? But since we do have election uncertainty and a little bit of seasonality coming into August and September, we could just be looking at a scenario where we're just setting a weekly lower high and maybe moving on for some lower low levels. So just pay very special attention, guys, to what happens after big tech earnings over the course of this week, whether or not we plunge deeper and go for the bounce or whether or not we try for the bounce right away because big tech earnings are good. That is going to be the determining factor, guys, whether or not we continue to see heavy momentum to the downside or whether or not big tech earnings can reiterate that we are in a very nice growth environment for technology and semiconductors as a whole. And maybe we just start leveling out over here and maybe do some sideways consolidation rather than this big weekly downtrend movement. Very important week on the horizon, guys. Moving into XLF financials. Financials looking very good here, guys. Why? Because we were in a little bit of a short-term daily downtrend here, right? Beautiful daily uptrend into some consolidation, daily downtrend, which means we were looking for some weekly consolidation, and we pretty much got it. Where do we come into, guys? Very close to the level that I was highlighting on these charts, prior all-time high resistance, newfound all-time high support, so looking very good for a bounce from here. That being said, nice engulfing move by the bulls right now, so if they continue this move into the Monday session, they have created enough space now to eventually reset the daily into a nice daily uptrend and just continue this weekly uptrend higher and higher and higher. Financials supposed to be one of your larger recipients of some gains leading into an interest rate cut cycle, right? So financials still looking very good. My favorite names, once again, I'll remind you guys, Visa and MasterCard. I've said it every single week for the past 4 or 5 weeks running, guys. We cannot ignore these very solid companies, guys, on big dips, right? Visa down about 11% from the highs. In the context of a bull market, whenever Visa goes down, 8 to 10%, it's usually a very good opportunity to buy. We'll go back to every single bull market, guys. Every single time Visa has an above 10% dip, it's usually always a very good opportunity to buy. Even this one in 2018, when we had an interest rate hike cycle that sprouted a lot of fear in the markets, you can see it was still a good buying opportunity. You can go back in history, guys, find every single time that Visa was down about 10-15% off the highs. You will see that even them and MasterCard, same thing, always a tremendous buying opportunity. How can we argue with 50% net margins and the moats that Visa and MasterCard have, guys? If we're not buying Visa and MasterCard at these low levels after 4 or 5 months of consolidation, What are we doing as investors? These are some of the best companies in the world. Do not fade these opportunities, please. I usually don't give financial advice, guys, but I'm fairly certain in saying that Visa and MasterCard will most likely be higher by this time next week, by this time next year, and by this time in the next 5 and 10 years as well. So not financial advice, but I'm just saying I am buying those dips heavy, right? Moving on to healthcare right now. Healthcare continuing to outperform. Very, very nice chart on healthcare as a whole. So daily uptrend currently in motion still, guys. Either one of two things is going to happen this week. Either we're going to continue to break new all-time highs and continue this daily uptrend, or at worst, we may just find a little bit of sideways consolidation. Where is the consolidation taking place? In a very nice area above the previous all-time highs. I love seeing consolidation above the previous all-time highs, guys, because on the larger time frames, that just goes to manifest. They were maybe looking for just weekly higher lows for some potential weekly uptrend continuation. Healthcare is looking extremely, extremely bullish. So if we get a little bit of a retest in this location right here, I do think that these locations right here are a decent little opportunity to be buying some dips on healthcare. Sector continues to be an outperform, and their earnings so far have been absolutely fantastic, and their guidance as well. UNH, of course, after their earnings have been on an absolute monster of a tear. And then we obviously got AbbVie earnings, one of my favorite companies, which I was pretty much so bullish down here on the channel, really telling everybody that I was taking some positions and heavily hinting at the fact that it was going to be a great buying opportunity because we were looking for the weekly engulfing move, weekly higher low, back test this whole support zone right here, and then run. And true to its fashion, guys, AbbVie coming in with some extremely amazing earnings and really pushing the all-time highs. So that's why healthcare remains an outperform for me. Now, moving on to semiconductors now, guys. So semiconductors trying to get a little bit of a bounce together here, but just be wary. We are still in the context of a daily downtrend. We are just expecting maybe a lower high and then potentially revisit the lows, right? It's all in the size of the bounce right now. And although the bulls do have a little bit of a bounce going, we can't really say that the hourly trend is confirmed. So far, just consolidation at the lows. This would be considered, guys, to be a little bit of a bear flag as of right now, right? So what we need to see in the Monday session is push above 243. If we can get a push above 243, guys, hourly uptrend is underway, and our daily bounce might see a little bit more legs. Now, in terms of the size of the bounce right now, you can see the size of the bounce only about 38%, so not the best. If we do roll over on the Monday session, guys, lower lows are very highly likely, and keep a very special attention, guys, on the companies that will be reporting this week. AMD is going to be a very big one for the sector. ON Semiconductor, not so big, but still a good gauge on the whole industry. ARM and Qualcomm and Lam Research on Wednesday will be your largest market movers for semiconductors as a whole. So just keep that in mind. Now, in terms of the weekly, what are we looking at, guys? Well, unfortunately, guys, lost the weekly uptrend. Now we're just looking to pretty much, right, as soon as we find a bottom, as soon as we can get a new daily uptrend, wherever that may be, that will be when your weekly lows are set. And then we'll be watching for the size of the bounce on the weekly. The bulls have a lot of work to do to get this weekly uptrend back. But from recent history, guys, they can do it, right? Sometimes it takes some time, especially about 3, 4, 5 weeks of time, but eventually they can do it. So right now, decent little support area, prior all-time high resistance. We are coming into that now, pretty hot, and we are in relatively oversold conditions on the shorter term time frames. So can this bounce continue to get some legs, guys? Absolutely. But however, if the rest of the market does not respond well to our semiconductor earnings this week, well, then we may just be revisiting lower lows. I am still very patient on this one, guys. The only two dips that I've started buying is pretty much in your largest players in the semiconductor market right now. I'm not including NVIDIA. Right? As of yet, haven't started buying the dip on NVIDIA just yet, just because the valuation is still a little bit rich. But the ones that do have very good valuation that I have started buying, I have put in a few purchases on TSM down here in the lower 155s. I love this stock. They have a 65% market share command on the entire industry. Very easy position for me to purchase. And the next one is an absolute monopoly, guys. And I love this one, even after their little earnings mishap right here, came right down to my support zone. So I did start putting in some orders on the Thursday session for ASML. ASML looking extremely gorgeous in this lower range right here, 855 all the way to 742. I will be buying the heck out of this stock if we continue pushing the levels a little bit lower. So those are just two of the names that I'm picking up in the semiconductor industry. NVIDIA, not touching it just yet. I want it to be a little bit lower. I'm going to be extremely greedy on my entries for semiconductors just because of how much they've ran. Now, moving into the IWM Russell continues to be an outperform, guys, 1.65% to the upside, looking very, very good, guys. Very tight range of accumulation at the tops. This is a bull flag. Now, where are we looking to expand into, guys? It is the level right above us, right? So we're coming into very big resistance. This is an entire zone from 2021, right? All the way up 230, pretty much all the way up to about 234 should prove to be very big resistance for the bulls. And I do maintain, guys, that if for whatever its reason, our earnings on big tech and the rest of the market are not well received this week, IWM, even though it is in favor right now because of the value, because of the rotation from tech into value and small caps, even if it is in favor, guys, IWM cannot be a shining star on its own. You will not be able to see the SPY, QQQ, XLF, XLV, SMH. You can't see all of these red and expect IWM to just push through an extremely massive resistance zone. It's just not going to happen, right? So this one is really a byproduct of the overall market continuously bouncing and going up. You can see it did hold up pretty decently, but if ever we have continuous drops here across the rest of the market, well, this one may just retrace a little bit further. I would like to find this one myself. If I am looking for an entry on IWM, well, we're going to be looking for the weekly higher lows. Eventually, they do have to establish those weekly higher lows, and I'd be looking down here, 211 down to 207. Now, I know it's significantly above that. You may think that this is too conservative, guys, but I'm going to be patient, not chasing anything, letting the market come to me. I want this retest area right now. I am not going to be buying this one into multi-year resistance. It's just not the fashion that I trade. Obviously, you guys are free to do whatever you like. I like this one for a sector outperform over the next 6 to 9 months, but only if the price is right. And that for me is down in this location right here. Breakout, retest, and then run. That is my desired trade location. Now, lastly, moving into the Dow Jones. So the Dow Jones not looking too bad at all, bouncing very heavily on the Friday session, actually engulfing our daily downtrend. The last most recent leg of this daily downtrend now fully engulfed by the bulls. So the bulls have a great chance of resetting this into a daily uptrend. I was reminding you, while this was in daily downtrend mode, what were we looking for, guys? We were looking for the weekly breakout, retest of the prior all-time highs right here on the Dow Jones, and then potentially run. That's exactly what we got last week. Retested the exact zone we were looking at, guys. Pretty much 39.9 all the way down to 39.5 was the pocket of interest that we were looking into, and now looking to run a little bit higher. So the bulls do have the space now to reset this into a nice daily uptrend and just continue this gorgeous weekly leg of uphead movement that we have, continuing our monthly time frame expansion as well. The Dow Jones should continue to be an outperform, guys, as a whole, just because it is a price-weighted index, meaning your big tech does not have this impact. It is not a market cap weighted index. It is a price weighted index. So the shares that have the highest share, the companies that have the highest share price, they have the most weight in the Dow Jones. And you can see which ones those are right now, guys. They are defensive companies. American Express, AMZN, look at their share prices. Caterpillar, right, is another big one. Goldman Sachs Financials, Home Depot, Honeywell, defense company, IBM, more defensive, Johnson & Johnson, JP Morgan, Microsoft. There are a few tech names, of course, slewed without the Dow Jones, right? You have Amazon up here and whatnot, but I want you guys to focus on which ones have the higher share prices. Travelers Company, insurance company, very defensive. United Health as well. Salesforce, a more defensive tech stock, even though it isn't tech. And Visa, right? Those are going to be the ones, and most of them are value-oriented names and should be the ones really contributing to bringing the Dow Jones higher. That's why I like the Dow Jones in the context of these markets right now. It could even outperform the SPY over the next short-term period of the next 1 to 2 months, roughly. So that being said, that's pretty much all of our indexes, guys. Now let's jump into our big tech names, shall we? So let's get into Apple right away. So Apple having a decent day on the Friday session, but still one of your weaker market performance on the daily bounce basis, right? Apple and Google, some of your weaker bounces out there in the market. Apple right now still in the context of a daily downtrend, trying to protect this 217 level, prior resistance, current support level right there, trying desperately to protect it, guys. But obviously, you know, Apple has earnings on the Thursday session, so going to be very tough to derive short-term price action. Usually Apple moves about 4% up or down given any single week of trading. With earnings, guys, probably about more close to about 5-6% we can expect on Apple this week. That being said, if Apple earnings are well received and the stock stays flat prior to their earnings, right, we may just be looking at a retest of the 230s, or to the downside, if ever their earnings are not well received, well, maybe we start revisiting around the 205, 206 area, which is more my desired location. So yes, price action right now does favor the bears for a little bit of downside continuation follow through, but if ever their earnings are well received, guys, the bulls can just buck this trend right back, right? So keeping a very close watch on this. Apple's still looking to just set a weekly higher low and potentially continue to rise. Now, I get interested in Apple, guys, if we get more of a sell-off. I need to see at least 205 down to 200 to get a little bit more interested on Apple. For that purpose, I'm looking for the monthly higher low down here in roughly the 205 down to 200 section right there. Looking for the monthly higher low for continuation of the uptrend. So if big tech remains out of favor and Apple isn't able to deliver outstanding earnings and outstanding guidance, we may just get a retest of this location right here, guys. And that would be a big drop top to bottom for Apple. You'd be talking roughly 14% from the all-time highs. What I want you guys to pay special emphasis on is the percentage drop from recent highs. Usually whenever Apple drops 10 to 15%, it's always a good chance to buy this company. Usually they do have significant rallies thereafter. Go back in time in the context of bull markets, not 2022 complete asset destruction, right? 2021, 9%, good buying opportunity. Apple right here, 2021 March, 15-17%, great buying opportunity. End of 2020. This one was a bigger one though, 15-20% drop, big gains afterwards, right? 2018 was an interest rate hiking cycle, so we're not going to use this, but early 2019, you can see another one, 15%, great rally. Just go back in time, guys, and derive what are usually the average consolidation periods on a weekly time frame, and that should give you a good margin of safety, right, for buying these companies. So Apple right now, a little bit too much for me. 205, 200 is my buy zone. Moving into AMD right now. So AMD continuously, unfortunately, getting a little bit crushed, right? Daily oversold conditions, and they do have earnings on the Tuesday session. So this one is going to be make or break for AMD, guys, after the close on Tuesday. Now, AMD is probably going to move about 8 to 10% after earnings. So let's say they remain flat prior to earnings, right? 8% to the upside is going to 8 to 10% to the upside is going to put us, unfortunately, right at this resistance level. So be very careful. Even if we have a great session after earnings, guys, it will be resistance, and we will maybe be met with a little bit of sell pressure in order to possibly form the daily higher low and recapture this daily uptrend. If earnings are not well received, guys, well, unfortunately, we will maybe be plunging down into the lower, let's just call it under 130, right? 127 down to about 125-ish. So the rules are as follows, guys. Yes, the daily bears are in control of this chart. Yes, we are daily oversold. And if they didn't have earnings this week, guys, I would say let's go for an oversold bounce trade and let's try and ride this one higher coming out of this support zone right here in the 140 to 130 level. But because they have earnings, guys, all of that really goes out the window. We will have to wait after earnings. Now, one thing's for sure, if we get a nice little pop on earnings, I will be buying every single dip thereafter, probably using short puts in the 145 to 140 level. In the event that they have negative earnings, guys, daily oversold conditions will be absolutely on the table, and we'll be looking to pick these bottoms down here, potentially in the lower, maybe 125 down to 120 zone. This area right here, guys, 120 down to 110, if ever we get there in the next 2, 3, 4 weeks in the event of continued semiconductor weakness, this is my back up the truck location for AMD. This right here is my buy the dip opportunity for AMD. A little bit of a nibble, but if we come down here, guys, this is going to be a heavy buy for AMD on me. So we'll keep a close eye on the price action after earnings, and I will update you with my desired plan after that time does come. But those are just a few preliminary areas for you guys, right? Moving into Amazon right now. So Amazon, another one of your big tech names, right? Amazon, of course, reporting earnings this week on the Thursday session. So price action, as with all the other companies, most of the other big tech name in this week, guys, excessively tough to derive good price action levels before earnings. Amazon can move anywhere between 6 to 10% after earnings. We saw it last quarter where they moved about 8%, right? So 8% top to bottom would be pretty much getting us right back to the all-time highs, or pretty much plunging us back into this mid 165 level, which is pretty much your pre or your post earnings gap level of last time, right? So Amazon, very, very simple analysis right here, guys. Daily downtrend is maintained. We will keep an eye for the size of the bounce coming into this week here, guys. But as I said, earnings is just going to throw pretty much throw everything out of context right now. That's why I don't want to say, yes, we can try to make a daily bounce trade attempt right here, because earnings can really send us either way. Now, Personally, I do think Amazon is going to smash it out of the park on their earnings, but you saw what happened with Netflix, you saw what happened with ASML, you saw what happened with a lot of other companies this earnings season. They could have very good earnings, but they're just not well received by the market because of the current conditions that we're in, the rotation out of big tech, right? So Amazon, preliminary level, guys, if we come down here, 175, I start to be really interested for a nibble. But if we start coming down here in the lower 160s, mid 160s, 165 to 160, guys, that is pretty much load up the truck levels for Amazon for me after their earnings. Yes, we have a very nice weekly uptrend right now, but you guys know with earnings, it can go either way, right? So this is my back up the truck level, guys. 165 on Amazon, usually a very good location to be buying the dip on Amazon anyways right now, right? Minus 9% all the way down to about minus 16%, usually a very good time to buy. Take a look at this one, 10%, great buying opportunity. Take a look at this one in September, right? 12, 13%, great buying opportunity. Go take a look back prior to your, prior to the consolidation period right here. And we can find other instances of this as well. This one was actually COVID, so I can't really take that, my bad. If we go back to 2019, 15% had some upside thereafter. Not going to take 2018. It was an interest rate hiking cycle. This one right here prior to it, 14%. This one right here, 10, 12%. So you guys get the drift, right? You understand what I'm trying to showcase here. Usually when big tech names are down 10, 15% from their recent highs, it's usually a very good buying opportunity. So this area is where I'm going to be going shopping for Amazon over the course of this week. Now, moving into Google right now. So Google, give me a very quick second. No coffee, too late, so into the water right now. So moving on to Google, guys, daily downtrend captured by the bulls, of course, coming into daily oversold conditions. And this one has already had earnings, so we don't need to be too worried about this one for earnings, except for the carry trade, right? If Meta, which is also exposed to advertising, and Microsoft as well, which is also exposed to Google's cloud business, or in the same industry, right? Well, those may have a negative impact on Google if ever the market does not receive them well. So Google right now on a very nice deep discount, right? So on a discount of about 13% from the all-time highs. Same rules apply, guys. Go back in the context of bull markets, 13%, 12% right there, 10% right there. You can see all good buying opportunities. Go back to 2021. Consolidation here, 8%. Consolidation here, 8%, right? You guys get what I'm trying to tell you. Consolidation here, 14%. Any time in history, not going to take 2018. This one right here, 2019, 16%. These one right here, early 2018, right? Same thing. Go back in time and see how much they have dropped on a weekly context basis, and you'll get a good idea of whether or not it's a good chance to buy Google right now. That being said, Google, I like it right now. I am starting to buy into positions on Google. Got assigned some shares at 170, and I love it. If ever Google drops even lower, trying to attempt the gap fill from prior earnings down here in the 160s, I love it even more, guys. 160 to 150 for Google. If we get there over the next few weeks, over the next month, that is going to be a buy the dip opportunity, a huge buy the dip opportunity for me on Google, right? So if I had $1,000 for all these dip buying opportunities, right, I'd probably throw $200 of that 1,000 in here. If we get down to 160, then it would be a bit heavier, $300. And if we somehow get down to low 150s, I would throw $500. So you're just adding heavier and heavier while these stocks keep dipping to give yourself a better cost basis, right? So hopefully that makes sense on Google. As of now, bears in full short-term control. We will be on watch for the size of the bounce when it happens. Obviously, the bounce size is potentially starting to form up. If we get a nice Monday or Tuesday session, look at the size of the bounce, guys. Size of the bounce will be key in determining whether or not the bulls have enough juice to reset up the daily uptrend. Moving into Meta right now. So Meta, not too bad at all, 2.71% bounce, but unfortunately still in the context of this daily downtrend by the bears. So daily bounce is now underway, but similar to the rest of other big tech names in this week, guys, they have earnings on the Wednesday session, so tough to derive price action. Now, Meta usually moves about 8 to 10% after earnings as well. This one, they moved about 11% to the downside, so 10% up would put us pretty much all the way back to our all-time high resistance level around 520, and to the downside, that would put us pretty much at the low of last earnings. Now, one thing's for sure, guys, yes, we are monitoring the size of the bounce, of course, to see if the bulls have it in them, but with the earnings session, guys, it can go either way. So, after earnings, one thing's for sure, if after earnings we do a massive move to the upside like this, I'm going to be looking for the daily higher low setup to potentially enter some positions in Meta. I've already bought a little bit of Meta shares down here because I like the valuation of Meta stock down here, but I'm going to be waiting for earnings, because if ever we come down here, guys, this lower range right here on Meta, guys, trust me, if we come down once again 420 down to about $405. This is the massive buying opportunity for Meta, in my humble opinion. So I'm nibbling right here, but if we come down 420, 410, that is where I'm going to be going very, very heavy on Meta as a whole. Valuation of the company is looking very, very good right now. Even at 500, it was a 1.23 peg. Now it's even lower than that. If we come down to about 420, that's going to be roughly a 1 peg, guys. It's going to be absolutely amazing buy the dip opportunity. As a percentage of all-time highs, guys, take a look, right? Meta is down about 15% from the all-time highs. After earnings, was it a good proposition to buy Meta when it was down 20%? Yes. Take a look at the dips in the past, right? Let's put this on the weekly, so we have less chart to cover. So take a look at these dips, right? 14%. This one right here, 13%. Was it a good buying opportunity? I don't know, guys. You tell me, right? In this context right here, big dip, 15%. Was it a good dip buying opportunity? I don't know, guys. You tell me, right? In the context of bull markets, we can take these all the time. 15%. This was COVID. This was your interest rate hike cycle in 2018, the battle of Jerome Powell versus the Fed. This was shortly prior to that. Nice dip buying opportunity before the macro change. This one right here as well, 2016, 15%. You guys get what I'm trying to tell you, of course. So a little bit of a light dip buying opportunity for me, yes. But if we come down to this lower range right here, this is a no-brainer. Free money, in my humble opinion, not financial advice. Now, moving into Microsoft. So Microsoft moving up 1.64%. Not too bad of a day on the Friday session. So daily downtrend underway, trying to get that bounce too. But obviously, guys, Microsoft with their earnings on the Tuesday session, not too much price action before them. Now, Microsoft isn't known to move too much after earnings, usually only about 3, 4, 5% at best. So I'm not expecting too big of a deal from them. Now, 3, 4, 5% could bring us back into the 445. And if that does happen, guys, the bulls have a great chance of getting back above this prior resistance level, which was support, but now we're under its resistance. Bulls would have a great chance if we can get over that with earnings, retest and run. I will be looking for the retest trade. I did add a little bit of Microsoft shares on the Friday session in this lower 425 range. So I like the valuation down here, but if ever, guys, we just continue the sell-off after earnings, it may bring us down into my juicy buying location, which is these guys right here, right? 405 down to about 390. If ever we revisit that range, guys, such an extremely good buying opportunity for Microsoft stock. Yes, we'd be losing the weekly higher lows, but that's okay. Microsoft sometimes does that and then can recapture a little bit later, right? So going to be looking for a gorgeous dip buying opportunity in this lower location, 405 down to 390. Top to bottom, that would be a sell-off on Microsoft of anywhere between 12 to about 14%. Now it's only at about a 10, right? So I started buying at 10. Take a look at the dip buying opportunities, right? 8, 9%. Great buying opportunity. Take a look at this one right here, last September, right? About 12, 13%. Great dip buying opportunity. Let's go back to the context of bull markets on Microsoft. 6%, great buy. This one right here, 8%, great buy. This one right here, 9%, great buy. This one right here, 14%, great buy. So you always know, right? That 8 to 15% is where we need to start buying and buying all throughout that dip, right? 2018, we're not going to take it. This one right here, 13%, great buying opportunity, right? So we can go back years, 5, 10 years, and determine it's always been a good buying opportunity to buy Microsoft after a recent high when it's on a dip of about 8 to 15%. So that is where we will be buying. That's why I'm starting to buy here, and I will buy all throughout these levels, culminating in a gorgeous last zone of support down here at the 400s. Moving on to Netflix. So Netflix also very solid company, guys. However, on a daily downtrend right now, this one obviously does not have earnings. However, we are coming into a very nice support zone right here, 635 down to 607. And with all the volatility of the past couple of weeks, guys, Netflix has still not came down too much in this location. It shows you your long-term bulls are doing a great job of defending this, right? Monthly uptrend, set the monthly higher low, monthly uptrend, trying to set the monthly higher low in this location right here, using the resistance and now using it as support, trying to keep that monthly trend alive. On the weekly, guys, dangerous level right here, guys. We are technically losing the weekly, but not by much. Netflix can do this where they lose the weekly, then it just takes them a hell of a while to get it back, right? So Netflix not looking too bad at all. I will be more interested to buy if we get closer to 600. And if ever we break 600 because the market completely falls apart and come down 575, 550, revisiting this zone right here, such a juicy buying opportunity. So coming down to about 605, not opposed to adding a little bit of Netflix, right? Coming down to 605, that would be about 12%. And down all the way here, that would be about 20%. Go back in time on Netflix and tell me if it was a good opportunity, right? 8% there. This one right here, 6%. After this last earnings, 12% great buying opportunity, right? Now, let's go back into the context of a decent bull market. So recent highs right here came down 16%. Yes, a little bit of a dip, and then you can argue, but it fell off a cliff, right? Yes, 27% to the downside. This one is a little bit more volatile than the rest of your Magnificent Seven names, but still, anywhere in the context, guys, of a 15, right? If we come down here, that will be about 13, 15. All the way down here will be about 20. 15 to 20%. Yes, it could get a bit lower, but usually always a good idea to be buying Netflix more anywhere between the 15 to 20% range in the context of an overall bull market. And you can go back in time. I want to do this one for everyone, but you guys get the idea, right? So hopefully that makes sense on Netflix. Those are my levels that I'm going to be looking after. Now moving on to NVIDIA. So looking at NVIDIA right now, 0.69% to the upside on the Friday session, but the bounce on NVIDIA, guys, is not as strong as the rest, right? So NVIDIA is still struggling a little bit. They had a nice bounce on the Thursday session though, and what they're trying to do is really reset this into a nice hourly uptrend, but we're struggling with the rest of semiconductors. All the semiconductor charts pretty much look the same, right? So we are dealing with a little bit of overhead resistance right now, 119 to 115. This was a very important zone on the daily. Unfortunately, we have now lost this area, so we're dealing with it as resistance. Take a look at the size of the bounce, even though we closed towards the lows on the Friday session, guys. Size of the bounce was... it was okay on Netflix. I'm not going to lie. I mean, on NVIDIA, it was okay. It was about a 50% bounce at the top. That is decent, but it's definitely not a 618. 618 would have put us above this prior zone right here, which would have, you know, recapture that resistance, allowing us to maybe set up the higher lows into higher highs, but that has not happened. The bears reacting from this resistance may be looking for the lower lows if semiconductors are out of favor. Now, if this daily downtrend continues, guys, as a byproduct of weak earnings from AMD, maybe Lam Research concerns, and Qualcomm and ARM, right? If they cannot deliver, I do expect NVIDIA to continue its daily downtrend. And the next big area, guys, is coming up 104 to about 95. This is the area where I want to personally go shopping for NVIDIA. I think it represents a lot better value, and that may be max pain for temporary bulls in that location. If we do come down hard into here, we will be delving onto short-term oversold conditions on the daily RSI on NVIDIA, and the weekly, guys, that would be a very healthy weekly leg down, potentially 26 EMA here on the weekly reacting as well, and prior resistance should be newfound support. So I'm expecting a little bit of a bounce in this area. Now, whether or not we set up for a weekly lower high and continue for another leg down, that is anybody's guess, guys, but at least we should get a one-touch first bounce attempt on NVIDIA right here. So 105 down to 95 on NVIDIA, that would represent a downside of about 25 to 35%. That is exactly how much they gave back in the month of April, dropping about 22%. And you can go last fall as well. They dropped about 25% as well. That's why I like this area on NVIDIA. Going to be patient with this one as a whole, just because the valuation is a little bit tiny rich right now. And we are just looking for that monthly higher low. So this one could take a little bit more time to consolidate. Now, moving on to Tesla. So Tesla trying its best to hold up this level after the earnings crush, right? So such a crucial level of support that we're in for Tesla right now, 220 all the way down to about 200, right? Such a crucial piece of support for Tesla. Look, all the times it's been support, resistance right here, support for the markets, resistance once again, right? So it really loves this 220 down to about 230 area. All the moving averages are sitting right here at about 205, 200 as well. So in the context right now, obviously we know daily downtrend is clear as day, just expecting a lower high and potentially continuation to the downside if ever big tech remains out of favor. Tesla really didn't give us anything, any positive news in terms of short-term catalysts for the company. They were really focused on the long term, and that could affect the share price in the short term right now. So if we do start revisiting these lower levels, guys, 200 and below, I will be looking to maybe sell some short puts in the lower to mid 180s, 185, 180. I think the company just has better value down here, right? They really had a tremendous rally after their robotaxi hype event, which obviously ended in kind of a momentum crush for the company after they delayed it. And then obviously we got the deliveries number, which provided further momentum to the stock. But then we had the earnings, and the earnings were kind of lackluster as a whole, right? So as a whole, guys, still just hunting for this weekly higher low. And I do believe this 200 zone should be a great reaction for the bulls. Bottom end of our huge support level All your weekly moving averages are sitting there as well. So it could be a temporary bounce location for the bulls. And then hopefully we can at least maintain a tightening range. I do not expect Tesla to have some explosive upside, just no short-term catalyst for the company to really support that until that October robo-taxi event, which may just be a sell the news thing, right? So I'm going to be looking to sell some short puts, 185, 180, and that is where I do believe there's better value in this company. Now moving on to Palantir. So Palantir up about 2.07%, reacting very nicely from the zone of support we labeled on the chart, right? Previous resistance, newfound support for the bulls, and nice to see a little bit of a reaction. That being said, they did lose the daily uptrend, lower lows being set. We may just be looking for lower highs into another attempt, maybe for the daily downtrend if tech remains out of favor. That being said, on the higher time frames, we're looking gorgeous. Weekly uptrend in motion, looking for that weekly higher low. If we don't get it right here at the 24 and we drop a little bit lower, guys, there's a ton of other levels, right? 23 down to 22 is another big one. Could just be looking for a weekly higher low to continue its momentum higher. Palantir, obviously, guys, struggling with the 28 to 29. That's very normal. Huge area of resistance back in 2020 and 2021. Very tough for Palantir to smash this when overall tech has been relatively weak, but I do still love this company, guys. Anything, in my opinion, 25 and under is a decent long-term buy, and that is where I'm going to be looking to shop on Palantir myself. So that's pretty much everything for our daily market recap, guys. Now, let's get into some very juicy trades, shall we? All right, guys, so for some trade ideas that we're looking for in terms of this rotation, right? The rotation from tech all the way to value and potentially small caps as well. There's a few different ways to play this. And what I'm going to do is I'm going to give you guys some ETF plays that we can use and then some individual names per sector. Now, keep in mind, because of this rotation that's happening right now, we also do have interest rates coming down as well. So in that mix from tech to value, plus the interest rates that are going to be coming down, the sectors that will be in favor, guys, are on the 1 week relative, the ones that have been outperforming over the past 1 week and a half. Utilities, healthcare, industrials, financials, consumer defensives, real estate, and basic materials. You guys already know the levels that I'm looking to buy big tech and a lot of other technology stocks. We literally just went over them. So this entire list is going to be dedicated to more value names. So let's get right into it, shall we? So starting off pretty much, we're going to go from least risky and then go down the list, okay? So moving on, guys, in terms of our ETF plays that we can do in order to benefit from this rotation, number one is going to be SCHD. This is a dividend stock ETF. Now, if you're not, this is very good for people that are not too familiar with all of the names that represent some of these groups right here. That is why it is a dividend ETF, guys. And what's in this dividend ETF, guys? Well, some of your best companies in the world that pay dividends, but are also very defensive. Take a look at the list right here. Lockheed Martin, AbbVie, Amgen, Home Depot, BlackRock, Coca-Cola, Cisco, Pfizer, Chevron, Texas Instruments, Pepsi, Bristol Myers Squibb. You guys can go through this entire list and you will see that most of the companies that have been outperforming in the past 2 weeks are indeed on this list. But you may say, but Will, it moves really slow. It's an ETF. Yes, I completely agree with you guys, but look at the technicals, right? Looking for the monthly uptrend breakout of a 2-year range. This is significant. Usually when we get those breaks, they break and they break hard. Now, we can use just this ETF and buy straight shares. However, we can also do something else that I like to use a lot. We can go potentially buy some calls, and this is probably how I'm going to be playing this one as well, right? So moving into the call section, I will be eyeing probably the $78 calls for January 2025, about 4 or 5 months down the road at this point, right? Gives us enough time for this rotation to play out, gives us enough time to get a few interest rate cuts as well, and this ETF could have a decent amount of upside into it. That being said, I always go for in the monies, guys. We're trying to use this as a share replacement strategy. We're not trying to speculate with out of the money calls. Out of the money calls can be very decent, but if you want to not speculate and be a little bit more defensive, usually I just go with the in the money calls. These are about 77 deltas. I usually always go between about 75 and 80 deltas when I have calls more than a few months in the future, right? So moving on to 78s, guys, the pricing is fairly decent, okay? So take a look, $78 plus your cost, which is about $6.50, puts us at about $84.50. How much higher is $84.50 than the current share price? You guys will see, not that much at all, right? Only needs to move about 2.3% for us to be in the money. So very, very decent pricing on these call options, which is why I like this trade a lot. So that's just a quick little idea that we can be using for some more value-oriented names. Another ETF that I like a lot is TLT. This is a pure rate cut play right here. I've been waiting for this one for so long, guys. This is a play on long-term yields coming down. TLT is 20-year bonds. Now, to save you the fundamentals around bond analysis and duration analysis, just understand that the bonds that move the fastest when you have a shift in interest rates are your longer duration bonds. That's why I like going with TLT. 20-year bonds, looking for the eventual recapture, guys, of this weekly uptrend, starting to maybe put a little bit of a monthly uptrend back in motion. Now, this one is a little bit of a slow mover because it's bonds. So usually I play it with TMF, which is the 3 times leverage version of the TLT. So for people that want a little bit more risk, you can do a little bit of TMF if you so choose, if you like this play as a whole. I myself have started nibbling on TMF too, just in the event that we do get those rate cuts and the market really starts rallying for TMF. So those are just 2 little ETF plays that I had on deck for you guys. Now, let's get into some individual names, shall we? We're going to start off with a great category that's responsive to interest rate changes, and that is real estate. And I'm only going to give you guys my 2 top favorite real estate companies in the entire market right now. Number 1 is Vici Properties. Very, very clear reason, because they are pretty much your lead real estate company that operates out of Las Vegas, Atlantic City. A majority of their holdings, well, actually, yeah, pretty much 90% plus of their holdings are casinos, and travel and entertainment has still been booming. They are the landlord for the MGM casino brands. So they own all the properties, and their lessees, so who owns the leases, is their parent corporation, right? So they don't really have a probability of not being paid. And they pay a very nice dividend as well, about 5.38% right now. Looking extremely good on this chart, guys, for some potential weekly trend continuation here and start attacking, excuse me, I have something in my eye, start attacking some of these higher levels after consolidating here while interest rates have been high. Very, very solid companies. One of my favorite REITs in the entire market right now. The other one is O. Just ticker O. This is Realty Income Corporation. If you don't know what they do, they are the industry leader in triple net mortgages. What is a triple net mortgage? Well, if I'm a landlord, right, and I have a tenant in a building, what do I pay for and what does a tenant pay for, right? So a triple net lease is a lease in which the landlord pays for nothing. They pay for no utilities, no maintenance, no taxes and whatnot. The person that holds the lease, they pay everything. The landlord just collects the rent. It is the best possible lease structure if you are a landlord. What type of companies does O Realty have properties with, right? Think Home Depots, think Walgreens, think CVS, think fast food chains. They own all that real estate and they just collect income and income and income, paying a very nice dividend, 5.3% as well. And you guys can see clear shift ever since we've been in heavy consolidation now, going for the weekly uptrend shift on this one and looking to recapture a lot of levels that were lost in this heightened rate environment right now. I still believe anything in the mid to low 50s on O is an extremely good value proposition for any person that's interested in real estate. And then we obviously have a few companies that are exposed directly to real estate without owning any real estate, right? So Home Depot is number 1. Rates coming down, people may be tempted to do more renovations on their homes and whatnot, but right, keep in mind we are looking for the continuation of a potential weekly uptrend and looking also for the expansion of a new monthly uptrend too. So Home Depot could be a very decent one. It's come down a lot over the past couple of days. Could be an interested value proposition if we do dip maybe lower than 350 all the way down to about 240. That would be a location I'd be looking for Home Depot. Lowe's as well, one of their direct competitors, of course, has the exact same chart. Gorgeous daily trend engulfing move right there. Weekly engulfing move too, looking for that potential price continuation here into some of the all-time highs after really being muted for a better part of the last 2 years. Fundamentals of both these companies are very good. And the last one that I have for you guys, a little bit of a one that nobody ever talks about, Public Storage. Public Storage has also been sideways for the past 2 years, but this company dominates its business model. It is the largest, obviously, player in the public storage land space, pays a healthy dividend of about 4%, and could see some very nice share appreciation. Look at this company over the long term, has no problems at all delivering very nice returns, pays a nice dividend. So anything pretty much, $2.95 and better, I'll be looking to go shopping for a little bit of PSA, and you guys can do the same if ever you like this company. Just an idea that I'm throwing out there. None of this is financial advice, guys. These are just all different trade ideas that I'm throwing to you just so you guys have some base and some knowledge to build your own trade ideas off of as well. Now, we have to, in the context of a rotation to value, we have to talk about industrials, guys, especially in the in the stocks that have very, very high financing costs for their products. Think Caterpillar, right? Extremely costly to finance some Caterpillar machines, which is why their stock price virtually pretty much since this time in April, right, has been a little bit flat, but they've had gorgeous share price appreciation all throughout this industry where where interest rates have been on the up and coming. However, very nice potential continuation of the weekly uptrend right here. Any retest of this lower location right here, as we got last week, guys, if we do get a nice little dip back into here, 340 and below, keep in mind your support area is all the way down here, juicy level of support, just looking for that weekly trend expansion potentially, and some further monthly continuation on this chart, looking very good for some continuation of the trend expansion. Fundamentals of all of these companies that I'm giving you guys, they're all good. It would take me so long to go through every company's fundamentals. Just understand that I obviously have done my research, guys. I follow these companies very closely. Their fundamentals are very good. John Deere having one of their lowest PE ratios that they've had in the last 10 years. Look at this zone of accumulation, guys. This is 3 years worth of accumulation. When this one pops, it is going to pop hard. Looking very good for some accumulation in these lower levels. I love this stock, guys, down here. Anything below pretty much 375 can't go wrong with some John Deere. So I have picked up a little bit myself on the dip last week at 370. Just looking for the continuation of the trend expansion because lower interest rates will favor this company as well. So looking very, very solid for a trade opportunity on John Deere. Then we have one of my other favorite companies in industrials, and that is Canadian Pacific. Canadian Pacific, one of two monopolies pretty much for railways in North America, looking extremely gorgeous for the trend expansion. Same thing as John Deere. We have 3 years worth of price accumulation in these levels. The fundamentals of this company have been getting better ever since. This accumulation, guys, usually when they accumulate, they tend to pop very hard. So looking for that monthly trend recapture on CP. They do pay barely a tiny little dividend. But this one, guys, just looking into it for the share appreciation and just looking for that weekly trend expansion, benefiting from that rotation into value stocks as well. With this breakout, guys, this is pretty much a breakout. You can see it on the higher time frames, right? Trying to break out on the monthly, retest the top end of the support range right here and run. Very gorgeous trade opportunity, if I do say so myself, right? And we can go into the defense stocks, but defense stocks have ran a lot, guys, right? Lockheed Martin after their earnings. I was talking about it 2 weeks ago, just down here, saying it was a gorgeous buying opportunity, and it was. Raytheon as well. Very, very nice buying opportunity down there. They had their earnings and absolutely ran. These ones have ran a little bit too much for my liking as of now. Don't really want to chase them, guys, but if we do get retests of their prior all-time highs, could be great for continuation. I do not see these losing their longer term timeframes, but the advantage, guys, of SCHD is that Lockheed Martin is one of your top performers in this one. So if you want to get a proxy to that, that is what I recommend, just SCHD and potentially the call option side on that one. Then we're going to be getting into another industry that could benefit from reduction in interest rates, this time for the consumer, right? So what has the consumer loved doing over the past year and a half since interest rates have been high? They haven't been shopping for goods much, have they, right? Consumer discretionary has been down. But what has continuously been booming? It has been travel. So here are a few travel names that I really, really like for some continuation into the second half of the year and all throughout next year as well. So Marriott, one of their leading top brands in the entire world right now for travel and entertainment. Marriott does not own the hotels that it's licensed to anymore. It is a franchise model. All they do is collect royalties. Other people own the hotels. So these guys have almost no skin in the game. So they've been able to pump out decent, very decent profit margins in the process. I like them for some continuation to the upside as well. Looking very, very decent for Marriott. A lot of super investors own this one. And you guys can see the fundamentals for the company, right? Gorgeous EPS expansion, gorgeous revenue expansion as well. I would not give you B tier hotel chains to go for. This one has an extremely good loyalty program with it as well. The valuation is not too bad up here. So that's pretty much everything on Marriott. One of its competitors, direct competitors, is Hilton Brands as well. Hilton Brands establishing some very nice support in this lower location right here. Even if we drop a little bit lower, guys, anything $215 down to about $200, guys, I really, really like for Hilton for some continuation. This chart needs no introduction, just looking for a weekly higher low for some potential continuation, guys. And even the monthly looking very good for continued monthly trend expansion. The business is firing on full cylinders right now as well. Tons and tons of customers, right? Gorgeous EPS expansion in the next couple of years. Gorgeous revenue expansion. They're still out of their expansionary phase out of COVID, right? So looking very, very good on those two other ones. And some of the two last travel companies that I could be looking into, guys, is Booking.com. Booking.com, one of the most solid companies in the world. They're actually the largest grossing wholesaler for hotel rooms and flights and whatnot in the entire planet right now. Valuation of this company is not too bad, even if they are at the all-time highs. We did it not too long ago at 37.20. The peg was only a 1.44, looking very good for some upside continuation. So this little dip right here that we've been having, guys, if we continue in this lower location, 36, 3,500, decent little location to be picking up some Booking.com. You may say, yeah, but Will, the share price is 4,000. That's okay. You don't need to buy one full share. You can always buy fractional shares through most brokers. Take a look, guys. Ever expanding EPS the next couple of years and ever expanding revenue as well. This company should have no problem maintaining its long-term uptrend trajectory. And the last one, of course, we can't talk about travel without talking about Airbnb. Airbnb is looking quite decent in this location right here, guys. Right? So we were keeping an eye on this location. Very big level of support coming up. Huge support. Big resistance for the company coming into it again. Big support level, 142 all the way down to about 131. Decent value in this location, right? Trying to set up for the weekly bottoms and eventually find that weekly trend recapture on Airbnb. I like this location right here. I am going shopping for some Airbnb in these lower levels. They do have earnings coming up, right, in about a week's time. I don't think is it this coming up? Is it this coming Thursday? No, it's the Tuesday after that. So Tuesday after that, in about 2 weeks' time. I like this company come down to more 130, and I like it even more, looking very, very solid for some continuation to the upside, especially considering the Olympics, guys. They're one of the largest sponsors of the Olympics. And if you didn't see the news articles that were coming out last Thursday and Friday, people could not find hotels. Airbnb also is almost fully booked in Paris, guys. Should be a very good quarter for them. And they did say last quarter on their earnings call that this quarter, for the summer quarter, is usually one of their best quarters. So I'm looking for them to really smash it out of the park. Now, we can't talk about the rotation without talking about healthcare as well, right? So healthcare, I do maintain still to be a very high profile trade. Keep an eye on UNH, your market leader, looking for the breakout of the all-time highs, retest. We got a retest down here, 550 down about 527, retest and maybe run. We are looking for the potential monthly trend expansion. This as well, guys. This is 2 years worth of consolidation. We have to take it when it breaks, usually breaks hard. Do see them continuing into the later part of the year. Another one, AbbVie, one of my favorite companies out there. I had told everybody right down here, we still have an opportunity looking for the same type of trade. Break out of the all-time highs, retest the all-time highs, retesting maybe 180 down about 175. If we do get a retest down here, I will be looking to take it for some further trend continuation and some trend expansion. 2 years of consolidation, monthly breakout, retest, and run. So this one can have some legs, and the valuation on this one is fairly decent as well. And the last one we're going to be looking at in healthcare, guys, is Johnson & Johnson. Johnson & Johnson coming off some of the lows that they had in the prior 4 years worth of trading. I was saying that this level right here was a very good buying opportunity, 150. Now we're looking for the weekly trend expansion, looking for potentially a weekly higher low to be set, maybe using these moving averages as support, 150, 155, looking like a decent little area, guys. If we do retest it, to maybe back up into it, load up some shares, and get some continuation, guys. Johnson & Johnson looking very good, trying to recapture this monthly. Usually the company performs very well long-term. So to see them consolidate for so long in this area, guys, could be a great opportunity to be looking for some Johnson & Johnson to add to the long-term, even for some swing trade in this value rotation as a whole. Now, moving on, guys, looking for some financials. Can't talk about rate cuts without doing financials, right? So financials. Number one, going to be looking at Visa, right? I've talked this one pretty much to death, but you guys know the drill. Gorgeous area of support right now, 260 down to 245. They had their earnings, and I actually was quite pleased with their earnings. Just looking for that eventual weekly trend recapture. Great location here, guys, right? Looking for the size of the bounce. If the bounce continues and then we get our daily high or low, I'll be looking, guys. I already bought some Visa down here. I bought some Visa up here as well. Anything here is a juicy opportunity for Visa. Not even thinking about looking for the daily higher lows or whatnot, guys. I'm just looking to buy as a whole on Visa because this one can really start running away from us quickly. So we have to be mindful of that as well, right? Can't get too greedy with it. It's given us 3 months of drop. Good enough for me. MasterCard as well. MasterCard looking to pick these bottoms on MasterCard as well. Daily higher low potentially is inbound too. Anything 440 down to 430, guys, no brainer purchase for MasterCard in my humble opinion. They have earnings on the Tuesday session. Usually shouldn't drop more than that. I really love this location on MasterCard. One of your best stocks out there. Now, another one, insurance company, guys, and there's actually 2 of them, right? You can look at number one, we're going to be looking at TRV. If you guys don't know this one, Travelers Company, one of your largest insurance players in the game right now. Look at this long-term chart looking excessively bullish. Now, finally starting to put in some weekly gains, looking for that weekly trend change for some potential continuation to the upside, right? Earnings brought them down a ton, 8%. Now just looking to recapture that. This one should perform quite well. If you guys don't like this one, if you recognize Progressive a bit more, Progressive has been in a range since the month of April as well. Looking for this one. This is one of Warren Buffett's companies as well, looking for the weekly trend expansion. Preferably, I like Visa and MasterCard better, but those are just some insurance companies' ideas for you guys as a whole, right? Those are some of the ones in the finance space that I'm looking for. And now we're going to be looking at some of your financial data companies, right? SPGI hitting your all-time highs right now. One of its competitors, direct competitors, is Moody's Corporation for the rating agency, also hitting the all-time highs. One of their biggest competitors as well, we've done this one on the channel, that is not at the all-time highs, but could be looking to rally soon, is MSCI. MSCI, I like this one. They had their earnings rallied a ton after earnings, 8%, looking for the daily higher low for potential trend continuation. So anything here, guys, right? Even right now, 540 down to about 510, decent little buy the dip opportunity for one of the most solid companies in the entire market right now. Couple years worth of consolidation. Look at this chart long term. Just a matter of time before they rejoin their peers, SPGI and MCO. That's one of my favorite financial data companies in the game right now. And the other one being Intuit, tax preparation company, of course, some of the best fundamentals in the financial space too. Big area of support, guys, right? They've been basing this support ever since the month of January. We cannot ignore this. 630, 625, all the way down to 600. This location right here, great buying opportunity for me. And weekly cup and handle using this base of support. I would not be surprised if this one starts exploding in the second half of the year, looking for some continuation to the all-time highs, looking very good. Now, one last sector will be consumer discretionary. So now we get into a little bit more risky stocks, the stocks that have been out of favor for a while, and I'm only going to show you guys the more solid ones, right? So number one is McDonald's. They have earnings on the Monday session. We will see what happens. This one is a technical trade. I know consumer discretionary has been out of favor, but McDonald's is McDonald's, guys. They're not going anywhere whatsoever, and their demand remains one of the stronger players in consumer discretionary right now. They are at a very nice technical level. 200-day moving average on the weekly. It has always been a good value proposition buying McDonald's at a 200 weekly moving average. This is COVID. We can ignore it. Look back here, 2015. They don't touch this 200 weekly EMA that often. When they do, usually a very good buying opportunity. Monthly, 50 EMA tagged to the monthly. When's the last time that happened? 2015. Has it been a good value proposition buying McDonald's at a 50 EMA in the context of the last 15 years? Yes, it always has been. Gorgeous technical trade setup. We will see what happens on earnings. If we do get a downside on earnings, guys, I am buying the heck out of this dip on McDonald's. Valuation is not too bad. At this company, guys, similar to the analysis we did on tech, it is down 20% from the highs. Usually buying McDonald's 20% off any highs has been a very decent buying opportunity proposition in the context of overall bull markets. So looking extremely strong on McDonald's. Another one, Domino's Pizza. I do believe they got unfairly hit by their earnings. We covered them on the channel. I like this location for Domino's. 413 down to about 383. Definite buying opportunity, in my opinion, for a gorgeous long-term company, guys. Right, in such a decent level. Gorgeous little dip buying opportunity right now. They did hint a little bit that consumer discretionary spending was down, but their customer base is not affected whatsoever. The only reason they dropped like this, guys, is because they had to cut short their expansion of stores in two markets, Japan and France, and that was cut back by one of their largest franchisees, but does not affect the overall stability of the business, guys. Domino's operates in over 250 countries. You are not going to get a better deal than this in this stock, in my humble opinion. That's why I do believe 410 down to about 380. Definite buy the dip opportunity for such a legacy company. And the last one I'm looking at, guys, not looking at Starbucks, not looking at Nike just yet, all the other things like that. No, the one that's gotten crushed is UPS. I'm looking for UPS. They had their earnings. We covered it on the channel. They are turning the corner now in terms of package volume. I do believe this one should be very short to have a nice recovery and a short-term recovery for the stock. FedEx has been performing very well. They've since recovered the losses that they've had in 2022 and even earlier on in the year when they were struggling a little bit. The only one remaining is now UPS, right? So UPS should be coming very nicely right now, coming into a huge area of prior resistance, should now be support for the stock. So 125 down to about 120. I'm not opposed to building a position in UPS. Usually it's been a very good value proposition buying this company when it's in 44% dips off the all-time high. Look back here, 2018, right? Same thing, 34%. Great dip buying opportunity. Take a look at this one. You'd have to go back to 2008 to find a dip of this quality on UPS. Take a look in the context of bull markets, usually never drops more than 20-25%. So this 40% dip on UPS should be very, very good. And if you guys don't believe me, take a look, guys. They're recovering EPS over the next couple of years, recovering EPS after their blowout years in 2021, 2022, recovering nicely, and even revenue as well. So the guidance for the company by the CEO after their earnings was quite good. So I do like this one. Now, for some more risky plays, well, in terms of interest rate cuts, guys, right? Take a look at some of these risky plays. Well, obviously, number one, we're going to have to look at, guys, is Bitcoin. Bitcoin has been one of the ones that has been benefiting from the value and risk on trade rotation. Take a look at this. The markets have been absolutely nuking the past week, and Bitcoin is putting in continuous highs. I like this one a lot. This one, long-term bull flag above the all-time highs. This is an extremely bullish setup, in my humble opinion, guys. Looking very, very, very solid for that continued monthly trend expansion on Bitcoin right here. I am personally maybe expecting anywhere from maybe 80 to 90K. I'm not too sure why it has me on market cap right here. It should really be on price, but right now it's on market cap. So right now it's about, let's call it about, oh, I'm on the big, oh, my bad, guys. I picked the wrong one. So I picked the market cap on Bitcoin. So let me pick this one. So $68,000 level on Bitcoin. You may think, yes, it's expensive, guys, but in the long term, right? We are right back to where we were back in 2021. My price target for the next 3 to 4 months is about 80, 90,000. My price target by the end of 2025 is about $125,000 all the way up here. Bitcoin is going to be one of those assets, guys, that just goes up over time. I think it's now fully integrated in so many institutions' balance sheets, so many hedge funds, so many retail traders have this one as a long-term buy, set it and forget it. And don't forget, guys, the liquidity issues with Bitcoin. There's only 21 million coins out there. They're almost fully mined, and a lot of people are not selling. So that being said, Bitcoin could be a very, very nice trade, even though it is at the all-time highs right now. I think we're going for a lot more, but if we get some dips down 60, 55 again, I bought this dip on Bitcoin, and I'll continue buying those dips on Bitcoin. Now, other ones that benefit from interest rate declines, yes, are solar companies, right? So I'm going to bring you guys the two top ones, which is going to be FSLR. So First Solar, I don't know why it's not loading. Let's go right here. So First Solar, if you guys don't know what First Solar does, they have massive utilities installations for their solar panels. They do not cater to the overall consumer. We did their valuation a few weeks ago at 222.59 peg. This company is growing phenomenally, absolutely phenomenal growth in EPS, phenomenal growth in revenue as well. Should be one to watch over the next coming years. That being said, guys, take a look at this weekly dip. Gorgeous weekly dip buying opportunity coming into previous areas of all-time high support, coming into using it as resistance right now. Look at the monthly, guys. Look at this monthly. It is a clear breakout on the monthly, retest your prior range, and potentially run. So this whole area, 222 down to 191 is an ad for me. I like this company, one of my favorite solar companies out there in the game. Now, moving on, they have earnings on Tuesday, so be mindful of any drops for them. Now, keep in mind, Enphase as well, one of your leader in inverter technology. We did their valuation last week after they had their earnings, and the valuation wasn't too bad, but still a little bit rich, even though they are up here at the 120 range. I like them more in the more $90 range, not anywhere between $90, $100 in this lower area right here. I am a very big fan of Enphase. This one may take a little bit more time to turn around just because they're more exposed to the consumer. Something that the FSLR stock doesn't have as a problem. You can see 2024, big transition year for them. They do see demand resuming 2025 and onwards. Revenue, pretty much the same thing. So just still a massive accumulation zone for Enphase. I think this one, we may have to sit on it for a little bit of time, but $100 down to $90, guys, can sit on it and can be favored for the interest rate rotation trade. And then lastly, guys, a few risky trades that are out there. Well, obviously IWM, right? IWM, we know it as a risky trade. It is a small cap trade. I covered it earlier in the video. We are maybe looking for a retest of this location right here. Flipping through these charts so fast, it can't even have time to load. Looking for a retest, guys, 210, 210 down to about 208, right? If we get that level, I will not be going with IWM. I'm going to be going with the 3 times leveraged ETF. That's why I say it's a little bit more risky, targeting the retest of this location right here on that one, 43 down to $40. I may be even going full degen and going call options, 6 to 9 month in the money call options, maybe targeting the $35, $34 in the money call options on TNA, looking for a rally, guys. But we have to be buying 3 times leverage ETFs on dips. Never chase 3 times leverage ETFs. I cannot stress that enough. Look, how much is this one still off the all-time highs, right? Significantly. This is the danger of 3 times leverage ETFs. This one's down 60% from the all-time highs. IWM Russell is only off the all-time highs now by about 7%. Now, I'm not going to explain why that's the case, guys. Right? Just understand that you need to be buying these on a dip. I understand there's a lot of room to run still, but still we need to be buying these on dips. It is a core rule that I always respect. And now the last one, guys, obviously for technology is going to be QQQs. Now, QQQs, usually when we get a cyclical dip like this, guys, usually the QQQs drop anywhere between 10 to 15%. We're almost there, right? 10 to 15%. This one as well in April was about 7%. This one last fall was about 10%. Usually it's about 10 to 15% in the event of larger market sell-offs. So we're almost halfway there, right? More than halfway there. If we drop a little bit further, in my humble opinion, this is going to be a great buying opportunity for QQQ. TQQQ, look, how much it's off the most recent highs, right? But we need to be buying this one on dips. I'm not opposed to nibbling a little bit on TQQQ, but if we start dipping back down mid 50s, low 50s, guys, that is when I'm going to be building a little bit heavier position on the TQQQs, because I think that at that point, the QQQs will be down 10 to 15%, usually a great buying opportunity. And this one could take a little bit more time to play out, right? We know how long it takes to recapture weekly uptrends. So that's why I'm going to be conservative on my targets for this one. A little bit of a nibble right now. Yes, same as big tech. But if we come all the way down here, that starts to be a larger, heavier buy for me on the TQQQs. So those were some of the more riskier plays. So guys, obviously, there was a lot of plays out there, and there's so many more. The purpose of this was just to give you guys as many trade ideas and as many different industries as possible. So hopefully you appreciate all of that. So that being said, guys, if you did appreciate it, consider dropping a like on the video. I would appreciate it for the growth of the channel. Also, consider subscribing if you're new. We do these daily market recaps every Monday through Friday. And, you know, when I'm not here, I do them on Saturday. So that being said, guys, consider subscribing if you're new. I'd love to see you back in a future video. And lastly, if you have any questions at all, please feel free to leave them down below in the comments. If you have trade ideas, options plays, anything you want, guys, now is the time when we're selling off strategy, portfolio allocation, anything you want without it being direct financial advice. I will try my best to give you some hints in the comments section. So take care, guys. Looking forward to hear from you. Peace. See you soon.